What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. Today we're going to be discussing Bitcoin, what we seen last week, and what we could be looking for in the week to come. There is also an article that I want to go over briefly. This article is in the same line of thinking that we have been saying on this channel. We're going to discuss all of that in today's video, so make sure you stick around until the end. All right, first thing is first. Here is Bitcoin on the weekly time frame. Now, we were talking about this wick low down here being the near-term low for a good long time. Is it going to be the bear market low? Well, that's still to be determined because, well, you need future price action to determine whether or not this is going to be the bear market low or not. But we have changed our bias from bearish to bullish, and we did it 5 to 6 weeks ago when we put this move in. Basically, what we were looking at is we were looking at the weekly RSI. When we put in this oversold level down here, this was the most oversold Bitcoin has ever been in its entire history. Typically on the BLX index, whenever you reach oversold regions on the RSI, it has historically been the best place to be a buyer on Bitcoin. All right, so here we have the BLX index and the RSI is pulled up. As I mark the low on the RSI, or the oversold region, that was also the bear market low, and that happened almost every single time. Here is the 2017 and 2018 bear market low. It is marked by oversold on the RSI. We almost hit oversold on the BLX index. We did hit oversold on spot, but on the BLX index, when we had the March 2020 pandemic, almost hit oversold then, and then here we are currently. And as you can also see, if I drop a line here, you're going to see that this is the lowest RSI reading Bitcoin ever hit in its past. Good spot to become a buyer. All right, so with that oversold reading, we also had another indicator that we were looking at. So basically, this is the MVRVZ score. If you're new to the channel and you don't know what this is, basically the MVRVZ score is defined as the ratio between the difference of market cap and realized cap. So that's how you get this orange oscillator. In the red is overvalued. This is when typically, historically, you have wanted to be a seller and exit the position and take your profits. And historically, when you were in the green, this is where you wanted to be a buyer on Bitcoin. We have went over this in detail many times in the past. We're not going to do that here today. I just wanted to show you that, as you can see down here, we did hit the undervalued region. When we were up here and everybody thought this was going to be the bear market low, we said, no, we're not going to be buyers. We're not going to call a low or bear market low potentially until we get in the undervalued region, as well as the oversold region on the RSI. And as you can see now, we are starting to get out of this area. Now, is it possible that it comes back in? Yes. And if it does, I'll be a buyer then too. I am in buy mode, right? That's what I am doing. I am being a buyer. I am scalping long trades to the upside, and I have added to the hodl position. And you know, we're just going to continue to be bullish. We're going to continue to buy supports. Now, on the weekly time frame, you can see that we do have a push going up currently, and we are almost at my July target. If we go to the monthly time frame, I got long on the July low, and my July target was 25,338. Simply, it is May's low. That was it. That was my target. Obviously, I'm not going to exit my hodl position. That was just the scalp long trade that we were looking for to the upside. So we're getting ready to end. We got 1 day and 10 hours left on this monthly. So tomorrow will be the monthly close as well as the weekly close. All right, so coming back over here to the daily time frame, you can see that we are basically trading inside of what appeared to be a bear flag. Now, if you remember, I am not a pattern trader. I am a price action trader. Bear flags are typically exhausted when the flag is the same size roughly as the pole, all right? This is essentially your measured move from this move down, this is the low, right? So your bear flag is getting extended, but you are coming into a bit of resistance. Also, that May low is over there as well. So that is basically where we were targeting. We are going to be looking to be a buyer on any pullbacks into support. And we're going to use the weekly time frame for this. If we get a pullback starting next week, we want to see the weekly open happen anywhere. It doesn't really matter. But eventually, we do want to see a pullback. And the first area to look for potential support is going to be $22,583. And then the very next place to look for potential support, although I don't think we get back down there, is $21,027. It is old weekly resistance. And I told everybody before I left last week to look to be a buyer on this week's low. This week's low came in, tested old weekly resistance. That was where price found support. It is also daily support, and it happened at FOMC. If the FOMC was bearish, we got a 75 basis point hike, which was expected. We got that. Why did we get such a bullish reaction off of that? And also, why did we get such a bullish reaction off of a massively negative CPI print, 9.1? It's the highest CPI print we have seen in 40 some years. Why are we getting so bullish with this? Well, if you remember, what I was saying is essentially the market is forward looking. And last Saturday's upload, I discussed wheat, copper, oil, how those things were all skyrocketing during, the risk off environment that we had with the rising inflation. And since the market was selling those assets back off again, it was 100% possible that the market was looking forward to this CPI print potentially being the top of inflation. So I'm going to go over to my Twitter real quick. I did post an article that I do want you guys to read. All right, so apologies on the bright screen, but this is the article. It is posted on Twitter. You can follow me on Twitter by trade_talk_. I'm not going to read the whole article, as I do want to keep this video under 10 minutes, or try to keep it at around 10 minutes. So we're just going to go over the most important aspects of the article. During July's 2022 FOMC press conference, this is when the market reacted bullishly when he said we are now at levels broadly in line with our estimates of neutral interest rates. And after front-loading our hiking cycle until now, we will be much more data dependent going forward. So here is that Fed's estimate of U.S. nominal neutral rate, the orange line, and then the blue line is your Fed funds rate. You can see how neutral they are, both at the same place. The neutral rate is the prevailing rate at which the economy delivers its potential GDP growth rate without overheating or excessively cooling down. With the 75 basis point hike, Powell told us the Fed just reached its estimate of neutral rate, and hence from there, they aren't contributing to economic overheating anymore. But that also means any hikes from here going forward put the Fed in an actively restrictive territory. And remember, at the beginning of this, when inflation was on the rise, we said essentially that the Fed is willing to break some eggs to make an omelet. In other words, he doesn't care to let the market sell off with the hikes, because inflation is the most important thing to keep under control. All right, so moving on down here, this is pretty much the end. Using the CPI inflation swaps, this guy calculated the 1 year forward and the 1 year inflation break even CPI in the US. Basically, the expected inflation between July 2023 and July 2024. So 1 and 2 years out from where we currently are. His expectations is that inflation will be down to 2.8%. Remember, the Fed targets core PCE, which tends to historically be 30 to 40 BPS below core CPI. Basically, the bond markets expect inflation to slow down very aggressively and roughly hit the Fed target in the second half of 2023. So if the Fed is not nearly on autopilot anymore and the markets have a strong opinion on inflation and growth collapsing, then they can also price all other asset classes around this base case scenario. It starts to become a little bit more clear, right? So essentially, the bond market is pricing in lower inflation towards the back half of 2023. Lower inflation is bullish for the markets. The risk assets, the assets that we trade, the valuation intensive risk sentiment driven asset classes, crypto, stocks, SPX, NASDAQ, Ethereum, things like that. Those are your risk sentiment driven asset classes. And they generally tend to outperform when real yields decline. So essentially, everything that he's talking about in that article is bullish for risk sentiment asset classes. Everything that we trade, we are now approaching the lows, essentially. Your bear market lows, guys. Think about that. Is it possible, right? Obviously, you think it's not if you're still looking for short trades. There are a bunch of people out there that think that this is just a dead cat bounce, and the sellers will re-enter or re-engage this market. And it is 100% possible. But I will be a buyer at supports. SPX is coming into the weekly range or the weekly resistance. If we go over here to the weekly res, you're going to see where that is. You're getting pretty close to that. So bullish markets would be maybe trade up into this, pull back, check 39.60 as support, and then break out for the next 3 to 4 weeks. Get above 41.69. Now, I am not expecting the markets to see all-time highs again this year. So we still are kind of looking for that slow sideways drift to slightly up. That is essentially how we're going to trade the market moving on from here. So going back over to Bitcoin, we're almost at our July target of 25,338.53. Fantastic move to the upside here on this push. If we go over to the daily, the reason we're not getting uber bullish up here is because we are at the top of your probabilistic expected range or your expected move. So markets move sideways in ebbs and flows. So you have impulses to the upside and then you have declines to the downside. And essentially your trend still operates in the same direction. You can clearly see that we are operating on a slight trend here starting now. A trend reversal is when you have a low, a higher high, then a higher low, and a new higher high. So higher low, higher high, higher low, higher high. That essentially confirms trend reversal, especially if your trend was down. And we have been down. We started to short the markets in October of 2021. Currently, here we are in July 2022, and we think that we have found during the midpoint of the year roughly a bottom on the market, or a bear market low, if you will. You can clearly see that this is a higher low than this low. This is your high. You can clearly see that you broke that high with a new high. Then you had another push lower, which obviously and is clearly higher than this low. So higher low, higher high, higher low, higher high. You do have a bullish trend change. Here is the bottom edge of that trend. Let's pull up the Bollinger Band so you can see that you are at the top end of the expected move. You have been up here for a little while. You have a fresh new weekly high. This isn't the time to get long, so wait for a pullback. Currently have daily support at 23,784. But if we go into the intraday charts, you're going to see that that is not very far away from current price. So it's not the support that I want to be a buyer at. We did have a bullish trade this morning on Bitcoin when we retested the Heath level on the intraday or the hourly time frame. This was the entry, boom, target high of day, secondary target high of the week. We have broken both of those things. I also took a trade on Ethereum because Ethereum was lagging Bitcoin. Bitcoin was up 0.7%. And Ethereum was down. It was red on the day, 0.64%. So I got long Ethereum, and Ethereum is moving up as well as with Bitcoin. But here is that daily support down here, not to get sidetracked, 23,784.50. The support level that I am going to be looking for to become a buyer either next week or the week after next will be 22,583, spot 43. Once again, that is $22,583.43. That is last week's open. That also comes in line with this bullish trend line as well. So maybe not next week. Maybe next week we continue a little bit higher, or maybe next week we pull back. Maybe we don't get down to 22,583. But if we do, that's the level at which I will look to become a buyer. You can see over here that when we put in the weekly resistance and we broke out of it this week, last week, This is when we told people to look to get long at the weekly low. You traded right back down to, yep, weekly res, as well as you made your second tag of that trend line. So I mean, the market is pushing higher. It is still possible with the macro conditions out there that this is still not the low, that this is potentially a dead cat bounce or whatever, just a bear market rally. We are positioned long. We have been since July. That's when we decided to get long. I told everybody days before July even got here that we were looking to buy the July low at support. That has worked out beautifully. And although we didn't start to get any expansion until last week and this current week, it does look like Bitcoin is wanting to move higher. So we're going to stay long. And remember, the oversold reading on the RSI, it is the most oversold that it has ever been. That was the time to look for bullish entries, and also according to the MBRVZ score. Now, there are a few other things that we, also got us looking for long trades. Here is your open interest put to call ratio. So essentially, when your puts go up, that's typically when market participants are looking to sell the rally because they think the bear market low is not in yet. But as you can see, the orange line is your put to call ratio. Puts are not being bought. They are being sold. This tells us that risk appetite has returned, essentially. Are we going to see down moves, pullbacks? Yep, but we are going to be looking to be a buyer. Yeah, so that's pretty much it. Down in the description, there is a link to Bitget. Bitget is the exchange that we at the Trade Talk community are using now. If you would like to use my referral link, it is a referral link down in the description. Make sure you use the referral code XTSC. Once again, that is X-Ray Tango Sierra Charlie. Put that in. Come over, trade with us at Bitget. Bitget has the lowest fees out of any other exchange out there. They have no KYC, so it makes transitioning money from a cold storage wallet into Bitget seamless. Transitioning money out of Bitget back to cold storage, seamless. It's a fantastic place. If you're going to be an active trader like us, you might as well be using the best exchange for active traders, and that is because of the lowest fees. You guys have a fantastic day. If you liked this video, you can translate to me by smashing the like button. Also, if you're new here, why don't you go ahead and subscribe? We put out actionable intel every single time we put out a live stream or a video. We did call the top. We may have called the bottom, and this is the best place to be. Thank you guys so much for being here. Thank you so much for your time. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.